it's another challenge that many traders face, which is if you go down to a lower time frame, you're going to find a lot of support and resistance levels. So then if you have a lot of support and resistance levels, which are the main support and resistance levels that you want to take into consideration? If you take too many into consideration, you're going to find areas where price is always going to reverse. I very much look at a macro picture. And for me, the highs and the lows of previous years are the major areas of support and resistance. So what I'm looking for in this case, you can see that price found an area of support at the end of 2013, beginning of 2014, and now price is heading up. So the first area of resistance will be this pink line low of 2012, then the weekly 200 moving average, and then the high of 2013. So you can see that I'm targeting large areas where price can trend. Okay, I hope that makes sense. And also, to keep things even simpler, I usually just look at the previous 2 years. So now that we're in 2014, 2013, and 2012, they are the areas of support and resistance that I take into consideration. Previous to that, I then start ignoring them. Also, within that, okay, great, Charles. Thank you. Welcome. Between these levels, the next thing that we want to be aware of are round numbers. So in this case, we had 0.8 back here acting as a support level. Then we've got 0.9. Now you can see that price found some kind of comfort around 0.9. So now what we're looking for is price to head towards 1, and then 1.1, and so on and so forth. So round numbers are very important as well. And I'm sure you guys are aware of this. Sometimes it's a little bit difficult for people to understand which round numbers are the main round numbers. For me, they tend to be around 1,000 pips. Okay, so let's picture it this way. Imagine price, I've said this before, give it again. Imagine price is below the floor of your room. The floor is acting as a support level, as a resistance level, and that's a round number. If it breaks the floor, resistance becomes support. Price will then head towards the ceiling. That's the next round number. What we want to be aware of is that between the floor and the ceiling, there aren't any pink lines. There isn't the weekly value index. Okay, if there's no pink line or weekly value index between round numbers, we can assume that round numbers become the next target level. So that's giving us a target of 1,000 pips. Okay, now the daily time frame. The first indicator that I'm going to load onto the daily time frame is the daily 200 moving average. Now, the daily 200 moving average is a little bit different to the weekly 200 moving average. The weekly 200 moving average acts as a major area of support and resistance. It's an institutional moving average. It's just an area of support and resistance. The daily 200 moving average is also an area of support and resistance. So you can see it's acted as resistance here, and it's now currently acting as a support level. Okay, so it acts as an area of support and resistance, but crucially, the daily 200 moving average also gives us a bias in price action. Okay, so what does that mean? What that means is when price is below, that is when we are in a bear market, and when price is above, that's when we're in a bull market. So if I actually compress this chart, what you can see is that going back to last year, we had a nice trend on the Aussie dollar, US dollar. And this is where we were shorting it. And we made a lot of money between, say, March, April, all the way through to August, September. So, we're looking at several months of trend. Then we had a correction. Now, this is where trend traders are not trading. Okay, now in hindsight, it looks like a nice trend and it's pulled back. But the point is that because we're below the daily 200 moving average, this is where you don't want to be trading. It's the simple moving average, okay? Once price bounces, this is when we start trading again. So what you can see is that when we traded the Aussie dollar, we traded it in periods. We traded it in this trend when it was below, then we stood aside, and then we traded it again. Okay, I hope this is trying to give you a picture of how trend traders trade when the trends are in play, stand aside when the odds are against you. Now, of course, in hindsight, it all looks very good, but at the time, we didn't know that. When we're below the daily 200 moving average, we want to be shorting. When we're above, we want to be going long. Now, this is not some philosophy that I've created myself. This is knowledge that dates back to the 1970s and beyond that. Okay, this is what trend traders of old have used. The turtle traders, Richard Dennis, they've all used this same philosophy. Okay, so this is nothing that I've just simply created. Okay, so let's have a look at what's going on the Aussie dollar. So if we start at the weekly time frame, we can see that price is quite clearly heading up. It is now above the figure 0.9, and it's trading above, as of this week, it's trading above this pivot level here. So ideally, what we'd like to see is price head towards this pink line, break this pink line, and head towards the weekly 200 moving average. If we look at the daily time frame, we can see the price is now heading up. We've had a big, strong bull move as of today, and it's now breaking, and what we ideally want to see is a close above this pivot level. If we get a close above this pivot level, this is a good sign of a continuation of the bull trend. Now, what a lot of people try to do is go short at tops and go long at bottoms. Okay, look, that's a very difficult and an inconsistent way of trading. What you want to be doing is going in the direction of the trend. So when highs are being broken, you want to be going in that direction. So the Aussie dollar should be on your watch list for opportunities to go long, especially as this pivot high has been taken out. What we want to see is price target the figure 1 and the weekly 200 moving average. If we get a break above this, then we should see price head towards this pink line high as well. If you decide to go long above the at any point, you want to make sure that you can at least eliminate your risk at some point before this pink line, or you want to wait for this pink line to be broken and then continue to go long, because this will act as an area of resistance. Okay, that's fine. Del, that's good. That's good. That's good. If you're in, you're in. For whatever strategy, whatever philosophy you're using, if you're already long, A, good, you're in the right direction. B, just be aware of how to manage your exits. Remember, in trading, entry points are very easy to find. Anyone can find an entry point. Breakouts, pullbacks, go down to a lower time frame, find an entry on a 5-minute chart. Anyone can find an entry point. The crucial aspect, the two most crucial aspects to trading is exit management and compounding. Okay, if you don't know how to exit from the trade, you'll get stopped out too early. And if you don't know how to compound, you'll never make the money that you want to make from trading. What most people tend to do is risk large on small moves because that's all they really know, and that's how they end up blowing an account. Whereas what smart money traders do is risk small on big trends and then compound into that trend as it develops. So a trend which moves 2,000 pips will accelerate profits to 5,000 pips based on multiple positions. Okay, this is the key to making money. This is the key to making money safely, consistently, and with very, very little stress and time involved day to day. Okay, so if you are long, good. Just make sure your exit management is on point. All right, let's. I'm just going to basically choose currencies which I think are worth looking at. Okay, so the first currency that I'm going to look at is the Euro Aussie dollar. Okay, and now I am actually short on the Euro Aussie dollar. I have a couple of positions running. So let's have a look. Let's start at the weekly time frame. Right, what we had was price. We could see that price was clearly in this bull trend. And then at the start of 2014, we had a tram tracks formation, so a reversal candlestick at a major resistance level. We had a fake breakout above, but since then the trend has headed back down. It is now trading below 1.50. So this is an area of which was support, is now resistance. And you can see that price broke below, retested, and is continued. That's a very natural movement to price. And now it's finding potentially a support level at this pink line high. But remember, I only take the previous 2 years into consideration. So I'm going to ignore this pink line high, and I'm going to target the figure 1.40 as my next support level. Ideally, I want 1.4 to be broken and price to head towards the weekly 200 moving average, and then beyond to the following support levels.